those of you who are in the photo booth world, we are also putting this out there as a 10-week course for the photo booth industry also. So you can use these tips and ideas to get your business started. Or if you're an experienced person, there might be some things in here that you could use and tweak as you need to change your business from what you've had before. Tonight, my guest is Jerry Bazata. Good evening, Jerry.
Good evening, John.
Yeah, thanks for joining me tonight. Tonight, I want to talk about all of those things we need to do. We had an idea. We thought, like, we're going to be an entrepreneur. And then comes a world of paperwork. Now, for those of you who aren't familiar, Jerry works in the banking industry, and he's been on with us doing many of the shows on that, talking about the different things available right now from the banking world and the SBA and such. Tonight, Jerry, what I want to kind of look at is some of the paperwork that you, as a banking a loan officer, things that people need to have in place and they should be doing when they first start out to be ready to talk to you about financing, which we'll do in 2 weeks.
Okay. Well, the most important thing is you want to make sure your business is registered. Regardless of what your structure is, there's a couple of things you need to do. Number one, you need to have your business in good standing with the state in which you are registered. So regardless of the type of entity that you're going to choose, whether it's a sole proprietorship, doing business, DBA, partnership, corporation, you have to register it with the Secretary of State. So whenever you're going to go for money or whenever you're going to do something, we're always going to check that you're in quote unquote good standing with the Secretary of State. Now, there are some cases where people will tell you that you're working multiple states, or very often people will go register a corporation in Delaware because Delaware has the most easiest way to register a corporation.
Yes.
But you will also have to get what they call a foreign entity certification. So for example, if I'm register my business in the state of Delaware because I'm an S corporation, and that's where I register my corporate papers, my certificate of good standing says that I'm a Delaware corporation. I also have to file with the Secretary of State as a foreign business entity. Now, not foreign, another country, Britain, all that. It's because you're now registering with that state. So we also need to know that you're in good standing with the state that you're actually conducting business in. Most of the time, people will register their company in the state that they're doing business with, whether, for example, New Hampshire. They'll register with New Hampshire. We don't see a lot in the DJ world or photo booth world where people are registering in a different state to take advantage of tax laws there and then registering as a foreign entity in a different state. And it's not a lot. You can go right online with any Secretary of State across the United States. You simply have to file who the officers are, what type of company you're at. If you are, say, a S-Corp and you have a board of directors or you have a president, vice president, treasurer, very simple formats to do. And then, of course, you have to pay your annual fee, whether it's $200 or $100. When you go for a loan, we want to make sure that you are allowed to do business in the state that you're doing business in. So therefore, we will go to the Secretary of State. We'll look up your corporation and the Secretary will say, yep, they're in good standing. They filed their annual paperwork and they paid their annual fee. The other thing is you may also have to register in the town that you do business in, okay? It really varies from state to state, but some towns require, regardless if you are a home business or whatever, that you also have to register with the town. And again, they usually take the same paperwork that you file with the Secretary of State. So once you do that, you get your certificate of good standing. That's what they call it across the country. Simple one-page paper that, yes, you're in good standing with the state of Maine, the state of Delaware, the state of New Jersey, New York, whatever it is. You'll usually take that to the town. You'll pay another small fee, and they will say you're also in good standing with the town.
So that's the state and more of our local. Now, what about national? What do we need to do on that level? And you mentioned, of course, different ownership, and that was, we're going to talk about that at the end of our show or in a little bit here, kind of defining the S-Corp and the different things Jerry's been talking about. But what do we need to do on a national level, or is there anything we need to do really before?
Really, on a national level, you're filing for your employee identification number. So if you are not a sole proprietorship going under a Schedule C in your Social Security number, If you're filing any other way, you're going to want a tax ID number for the business. Now, as a sole proprietorship, you can do the same thing. And again, you go to the IRS website, you apply for an employee identification number. You're definitely going to need an EIN, as we call it. We use a lot of acronyms in the banking industry and in the finance industry. You will need an employee identification number, especially if you're doing payroll, because you're going to have to file under that employee identification number if you have employees that you're putting on, say, wages, W-2s, or something like that. And again, that's at the federal level.
Jerry, now you've mentioned two different things, and I think it's the same thing. The employee identification, the EIN, and you mentioned the tax ID number.
That's, again, EIN, employee identification number. We also refer to it as the tax ID number.
I just want to make sure, because I realize that's so people understood that, and they're like,
yeah,
how do you get the one but not the other?
Okay. And let me clarify further, John. A lot of times businesses will ask you for your tax ID number. Okay. It's the same thing. Your tax ID number is what you're reporting your income under. Okay. So depending on how your structure is, again, sole proprietorship, your tax ID number is going to be your social security number. If you're filing under a partnership, subchapter S, limited liability, C corporation, you most likely are going to file your tax ID number is going to be your employee identification number. So people need to be aware that throughout the industry, whether it be accountants, lenders, CPAs, tax attorneys, whatever it is, they'll often refer to that group as, what is your tax ID number? What do you file under? Some states, when you fill out the paperwork, okay, it will ask you for your tax ID number. That would be either your employee identification number or your social security number. Again, what number are you registering or reporting the tax information, your income and your expenses under?
So when we're filling out the paperwork, whether it's with the IRS or the state, is this something that we're going to need to have an attorney if we're going to be doing this as a sole proprietor to do these things, or is it something that we can handle on our own?
The majority of people can handle on their own, okay? The majority of you can go out there, file with the Secretary of State. It's not hard. As I was doing a lot of the loan documentation for the PPP program, a lot of businesses would go to prepare their paperwork, their loan document for the payroll protection program. We'd look at the Secretary of State. Oh, they weren't in good standing, or their annual filing was coming up. Contacted the customer. They went online. They did it. Unless you have a very complicated reporting system, you don't want to do it. Now, here's where an attorney will get involved, is you can assign an attorney as an agent for your corporation or your business. That attorney would then file all your paperwork for you, would be your acting agent. The problem is that anything you do, be it a borrowing resolution or any type of paperwork, the banks or whoever you're dealing with is going to want the agent to sign your borrowing resolution. Cha-ching! Another $400 for the attorney for him to put a signature on a piece of paper. Okay, so for the photo booth operators out there, for the DJs out there, I'm going to tell you, 95% of you can handle this yourself. It's not that difficult. If I can do it, you can do it. So, and I know, John, you probably can do it yourself, unless, again, you're making enough money, you don't want to be bothered with the paperwork. But a lot of times, if you call the Secretary of State's office, for whatever state, they'll gladly get on the phone. I don't know right now with what's going on, but in most cases, they'll get on the phone with you and they'll walk you through the paperwork. It's not that difficult. Just for an example, one of my clients, I called him on the phone, said, hey, you know what? Your certificate of good standing, you have to re-register. It's April 30th. I need you to go on site. 15 minutes later, he called me back and he goes, I'm emailing you now the certificate I just got online. So again, it's not a very intensive process.
Even when before the world of online, we went down to the Secretary of State office in Minneapolis, and it was a half hour to go and file all the paperwork for the corporation that we were putting together at that time. So yeah, it's not a
no. And a lot of times, all they want to know is who are the officers of the company, who's authorized to act on behalf of the company. If you have a board of directors, which I can't imagine any DJ company out there or photo booth company, unless you're some big, you have 1,000 photo booths and you have a huge staff. Most of us don't have that information. We don't have annual minutes. So it's really declaring, how is the company organized? How are you registered? When were you incorporated? Who has the authority to act on behalf of the company? Who are the officers? And a lot of times what I see is in sole proprietorships, if they become a single member LLC, or it's two people that are a partnership, one's the president, one's the vice president, the other one is secretary treasurer, and one or the two is named to act on behalf of the company. Again, a one-page statement.
And then it's quick and easy. You mentioned earlier DBA.
Yeah.
And of course, that's something that needs to be filed. The assumed name has to be filed, at least in Minnesota. I don't know if it has to be filed everywhere. I'm assuming it probably does.
Yes, yeah. You want to file the assumed name, because if you don't file the assumed name, what's going to happen is somebody else could operate. Then what they could do is if you don't file the assumed name and you've got a competitor that's mad at you, they're going to go to the state and file your name and then get a cease and desist order against you. So you do want to file the assumed name. That protects you. Okay. It also kind of protects you from fraud. It protects somebody from impersonating your company. So yeah, you want to take the few minutes to go register it, whether it costs you $20 or it costs you $100. It's an insurance policy that somebody can't take over your name and then hold it for hostage to say, fine, you want this business name? You have to pay me $10,000 or I won't release it.
And unfortunately, we've heard stories of things happening
Yeah.
like that. More than just oh, you want this domain name back?
Yes, exactly.
Those things are out there. So yeah, the assumed name, and the process in Minnesota is we have to file the paperwork with the state of Minnesota, and then we have to publish it locally in a paper of, what do they call it? A legal newspaper.
Yeah.
Is what we have to do. And it could vary from market to market, but that assumed name, John Young doing business as, wedding entertainer John Young, whatever it is what we have to do with that. Does that cover our bases? So we filed with the state.
Yeah.
We've got our assumed name lined up. We've got our employee identification, our tax ID number, if we need that. Are we missing anything?
No, not that I can think of right off the bat. I mean, this is going to get you established as a business. Really anything else that goes beyond that is then driven by what type of business you determine, how you're going to file your tax returns, what you're going to report, and then that's where the paperwork kind of becomes a little bit more complicated once you decide what your business entity is going to be.
Well, let's jump into that conversation.
Okay.
There are different types of business entities out there. Let's kind of go through the most common when it comes to someone who is running that small wedding entertainment or that wedding service.
Yeah, and John, probably 80%, maybe 70%, 80% of us that are involved in the wedding business, we're going to be sole proprietorships. We're going to be DBAs. We don't have employees. You don't have a lot of expenses. You don't have complicated financial reporting systems. So the majority of us are going to be DBAs doing business as, so Jerry Bazata doing business as DJ Jazz Music and Entertainment, or doing business as DJ Jerry Bazata. Mm-hmm. I'm going to file a Schedule C on my tax return. That's the most simplest format that we know. We are the business. We are the breadwinners. The income that we comes directly into our pocket, and a lot of the expenses are either home-based driven or are not that great. Think about in the photo business, what do you have? You have a van expense, you have mileage, you probably have somebody running the photo booths for you, you have maintenance and repair on it, you don't have huge warehouse, you don't have manufacturing pieces. So again, the vast majority of wedding people that I talk to, be it photo booth or DJs, they're going to be DBAs.
Is there a dollar amount that when you, as working in the loan field, that someone gets to a point in time with the amount of income, their revenue that's flowing through, that you're like, yeah, you probably shouldn't be a sole proprietor anymore. You should be something else?
The tongue-in-cheek rule is anything above $5 million.
Okay, so there's a lot to go.
Most DBAs are somewhere in the 10,000 to maybe $1 million, 2 million range. I very rarely see somebody higher than about $2 million as a DBA.
Okay.
Once they get above $2 million, they are then moving into either a S corporation, which is really a hybrid of a sole proprietorship. Okay. It allows you to take advantage of some of the aspects of being a corporation, but everything flows back to your bottom line. Everything flows back to you personally. When I say your bottom line, meaning you as a personal individual. So if you were really getting into $3, $4, $5 million in revenues, you would transition to an S corporation. Definitely, if you have two people, you're going to be a partnership.
Mm-hmm.
You're an S corporation. That's the basis. So, John, you and I go into business together and run the largest photo booth company from coast to coast.
Sure.
You and I together are going to most likely do a partnership. We're going to create a partnership agreement. That agreement basically says what the two of us are doing together. Now, being a partnership, one of the things that we have to think about is when we are a partnership, something happens to you, God forbid, John, your partnership your percentage of the partnership automatically doesn't come to Jerry Bazata. Your part of the partnership goes to your estate. So most people that get into business between a partnership have what they call a buy-sell agreement.
Mm-hmm.
And that is that I have an insurance policy that something happens to you, whatever the business is valued at will pay your estate for your portion, and I take over 100% of the business. Okay.
Mm-hmm.
Where I see a lot of partnerships fail is they don't have this buy-sell agreement. Something happens to you, John. Now the attorneys and the estate has to value the worth of this business. If they value this business at $1 million, I now owe the estate $500,000.
Mm.
So it can't, that's where a business can get destroyed. So just creating a partnership without going through that aspect of, do we have a buy-sell agreement? How is the partnership structured? That's where you're going to want to get an attorney involved, because you're going to want an attorney to draft that partnership agreement for you.
If you're in the banking end, you have a partnership that comes in to you. And is that a question you would ask them if they have that sort of a situation?
Absolutely. And we won't do it on a $20,000 or $30,000 loan. It's really based on what the revenues of the company are. So if I have two DJs who formed a partnership and came to me for a loan to buy, 4 photo booths, and it was going to be $40,000, and I looked at it, and so far this year they only made $50,000, I'm not going to ask for a buy-sell agreement. But again, John, you and I get together, we create a partnership, and we've got a photo booth company that's doing $5, $6, $7 million a year. I'm going to have a buy-sell agreement between the two of us.
Sure.
So you really kind of just need to know where you are in that aspect and what the valuation of the business is and how big it's going to grow. You can always start out with a partnership, and as the business grows and it becomes more valuable and the revenues are up there, you can always institute a buy-sell agreement later on. I've seen companies that have literally had to fall. I had one that I was working on, hadn't reached the financing agreement. We're in the middle of it, and the partner died tragically while trying to repair some machinery. And his partner had to fold the business and declare bankruptcy because at the time it was valued at $10 million and he owed the estate $5 million.
Ooh.
Yeah. And so, again, this was something they never foresee. They got into business together, but again, there was no way he could get around it. I mean, he had to fold the business and declare bankruptcy because he couldn't pay the estate.
Let's talk about, we've got, of course, some more, but between sole proprietorship and a partnership, do either of those give the owners a level of separation and protection that they will enjoy in maybe some of our future or the upcoming business types?
In what way do you mean that, John? Are you talking from sort of a guarantee standpoint, or
a lawsuit type of a situation where personal assets are on the line?
You're going to be on the line no matter what. No matter what type of business you have, your personal assets are going to be on the line. Because again, you set up this business, but again, you're the owner of the business. If somebody's going to sue you, they're going to sue you both the business, they're going to sue the owners personally. Where that really comes into play is, how do you have your insurance set up, John? So that leads into the next point of, just because you create a partnership doesn't give you this sense that, oh no, they can sue the company, but they can never sue me. that you've got to talk to an attorney about, and that you've got to have insurance for. Insurance is going to protect you from lawsuits. Just because you wave a piece of paper that says I'm a partnership or we're an S corporation, you can't sue us. Not going to cut it.
Hmm.
Not from what I've seen in my 30 years of banking and dealing with some companies that have gotten into some real sticky situations. And I've talked to many owners that have gotten sued, where in fact, the holding it as a corporation protected them. It really didn't.
Interesting. So
Yeah.
even in this situation of a limited liability, uh, would still not protect them.
No, and the limited liability companies were set up to hold a specific asset. That's what the really true meaning behind a limited liability company. It doesn't mean that you're limited from any liability. It's limited liability was set up to hold a specific asset. That's how it was created. Going back 20 years ago, we didn't have limited liability companies. It actually formed a separate company. It's technically a partnership, or it's a sub-driven of a sole proprietorship, but it was built specifically to hold an asset. The majority of limited liability companies that I see out there are ones that hold real estate. Very rarely do I see an operating company set up as a limited liability company. I probably, in my portfolio of 300 plus clients, I can't think of one that is an operating entity that is set up as a limited liability company. Again, the majority of them, 95%, are for real estate holdings.
That's interesting because one of the things that we see here in central Minnesota is a lot of farmers have it's the Dairy Barns USA LLC.
Yep. And again, because it's the dairy barn, it's the barn that they're holding, and it's the company itself, it's the assets.
And
Um,
that's
I'll see a lot of businesses where they may hold 8 different pieces of real estate. I have one client who's like that, and they have a different LLC for every real estate, so that in essence, if something happens at this real estate entity, it doesn't involve all their other real estate. So they really break it out more for liability purposes of not being sued and having their entire portfolio destroyed. So think of it from the photo booth. Let me give you a better example. Amusement parks. Every single ride at an amusement park is a different corporation. So therefore, the amusement parks cannot get liable as sued if something should tragically happen on one ride. Okay, it protects them from all the other rides. So I did a financing for a roller coaster years ago. I mean, a huge, and it's well known. And that roller coaster, when it was financed, which was about $4.5 million, that was its own corporation. That roller coaster was a separate corporation, and then fell under the umbrella of the main operating entity.
I've never heard of that. That's
Yeah.
interesting. I can see it now as you explain it. That
Yep.
does make sense.
Yep. I had another one, which was traveling amusement rides, based out of New Hampshire. Same thing. Every ride they bought was put in a different corporation for, number one, for tax purposes and for liability and for insurance purposes.
Hmm. Yeah.
So interesting.
Yeah, that is. Let's move to so we've kind of talked about we're up to the kind of S corp that you've talked about tonight earlier. What are the benefits and nuances of that?
Well, again, an S corporation is kind of a hybrid between a C corp and a regular corporation. Okay. Again, now you've kind of got, maybe you've got a sales manager, maybe you've got, 10, 12 employees for your photo booth company, your DJ company. You and maybe 2 other guys have gotten in together, so you're no longer a partnership. You're taking some advantages of the corporate incentives. Maybe you have an office space rather than working out of your home, so you guys have gotten a corporate condo. Maybe you have a warehouse. You've got a bunch of vehicles. So now you want to kind of take the advantages of that. Now, remember, the other thing is, in an S corporation, all of the profits are going to come from a K1 down to yourself. So the tax liability doesn't remain with the corporation. The tax liability acts with the individual owners. So therefore, that's why a lot of times you'll see distributions or you'll see shareholder loans. Again, it's how the accountants get creative. The fact is, with every as you move up sort of the status of what the companies are from a sole proprietorship to an S corporation, you have more financial reporting. So cha-ching, cha-ching, here comes the accountant bill.
Yep.
Okay. To do a typical S corporation tax return, most accountants are going to charge you $2,000 to $4,000. And again, that's on average. I know there's going to be a guy out there who's, I have an S corporation and I get it done for $500.
Yep.
It's his buddy from college from 20 years ago. But again, now you've got reporting with the state. You've got a different type of tax filing, because not only are you going to have to do your corporate tax return as an S corporation, but you're going to have your K-1 reportings that filter down to your personal financial statements.
Then the big one, the CCorp that people hear about, but you don't. I guess in the DJ industry, I don't know of anyone who actually has that as a structure.
Yeah, and I will tell you, probably out of my portfolio of clients, I have 10 that are actual C corporations.
Wow.
Okay? Again, the profitability remains with the corporation. Okay, most of them they have boards of directors. On average, C corps, I see revenues in excess of $10 million. So again, it's a very expensive reporting. There's taxes all around it. I would say, unless you are going to really, rock it up there, I don't know of any wedding business that I've run across in my 20 years of being in this industry of a C Corp for a wedding business. So, again, don't get misnomered by the fact that, oh, if I'm a C Corp, nobody could ever sue me and I'm protected. No, I've seen presidents of corporations being sued. You need to kind of push that off the table. What you really want to look at is and again, I've spoken at this at the DJ Expo, at the Bar Restaurant Nightclub show, written about this. Don't choose an entity because you think you're trying to protect your home and your family. Choose an entity that makes sense for you financially, reporting wise, and doing your income. Because when you come to me for a loan, the more complicated your business entity is, the more time it's going to take me to decide whether I'm going to lend to you or not. And the more reporting you're going to have to do, because now I'm going to ask for your accountant for information. For example, most C Corps, John, they're doing audited or reviewed financial statements. They're doing quarterly statements. That can be, in some cases, a $20,000, $30,000, $40,000 accounting bill on an annual basis.
Ooh.
Yeah.
But
so it does get expensive. But again, if you're doing $15, $20 million a year in revenue,
that's what you do.
Makes a lot more sense.
Excellent. Wonderful. Jerry, thank you much for kind of walking us through. And for those watching tonight, this is, of course, tonight was talking about the legal stuff, and then we kind of flash back to last week's topic a little bit with the business entities. In 2 weeks, we're going to have Jerry back again to really dig into going and approaching the banker, what kind of things we need to have ready to go. And we've talked about a little of these, but we're really going to nail that down of what it takes to go to someone like Jerry and say, please, sir, can I have some? No,
that looks like from Oliver, my daughter's first performance from Oliver. More, please, sir. I will preface this, John. For all of you that are in 2 weeks, I'm going to give you the top 10 mistakes that everybody makes when applying for a loan.
Excellent.
There's an article that appeared in DJ Times about, say, 8 years ago, and it's actually something I presented maybe 7 years ago at the DJ Expo. I'm going to walk you through the top 10 mistakes that people make when they go apply for credit from a business perspective. Okay.
Excellent. Looking forward.
And it'll be helpful to a lot of you out there. So
that sounds great. We'll be doing that again in 2 weeks because let's see, what are we talking about next week? Next week, we're going to dig into kind of putting together the business plan for the business, and then we're going to be talking financing with Jerry in 2 weeks. So, wow. Jerry, once again, my friend, thank you very much for coming on and being part of it. For those of you who've been following our shows where we're talking about the PPP financing, next week, Jerry, I think we're going to try to do another show to kind of give people an update on that.
Yep, we are. I should have some updates as to what the forgiveness program is. I know many people that were in the first round were getting close to that point. Don't panic. You have 6 months to apply for the forgiveness. So, don't everybody start panicking. The banks are still sorting through. There's a number of changes that are being recommended through the congressional leaders. I ask everybody to, just kind of take a breather for a second. use the money as we described in the previous ones. John, go back into John's library. We had a pretty good discussion, I think 2 weeks ago, John,
Yep.
about the PPP and the forgiveness program. We had some updates for sole proprietorship. So everybody take it easy, work on building your book of business for next year, getting out there, dealing with this year's weddings. And in 2 weeks, hopefully by either the end of this week or sometime next week, we'll have some good information for you to kind of put your mind at ease.
Excellent. Looking forward to that also. So